Hello?
Yeah, hi Kittu. This is Krishnan here. Can you hear me?
Hi, Krishnan. Can you hear me?
Yes, loud and clear.
Excellent.
Yeah, I can see the attendees slowly building up.
Okay.
We have 2 more minutes, so
Yeah, we'll wait.
we'll wait. I mean, I must tell you that that you are competing with Chennai Super Kings today.
Oh, that's tough to compete against. Maybe we should have picked a different day. Oh.
So people are now making a choice. Either it's Dhoni or Kittu.
Oh my God, I can't compete against that. I just cannot compete against that. I mean, even my own partner is a big Dhoni fan,
I see.
and so he usually watches Chennai Super Kings matches on his iPhone. So,
Oh, somebody has Dhoni. Come on.
I guess I've got at least one supporter.
Thanks, Raj.
Do people normally use the video, or do you typically turn it off?
No, as since you are presenting, I think it'll be wonderful if you can turn your video on so that all of us can see. I'm just going to be the voice here, welcoming you, and then it's completely over to you.
Okay.
So it is 7:30 your time, Kittu.
Yeah.
And we have 20+ people on the call.
Yeah.
What is your recommendation? Do we get started? Do we wait for 5 more minutes?
Let's wait for maybe a couple more minutes and see if people join.
Sure.
And then we can get started. I mean, I'd like to make this as interactive as possible.
Sure. So we just had a big event, a colloquium on AI at IIT Madras yesterday.
Oh, and coincidentally, I attended a very interesting talk by Yuval Harari.
Right.
About the implications of AI on society.
I see.
Very interesting talk.
What's like is there like a singularity moment that he's talking about?
No, he was talking about the implications, the ethical and the societal implications of AI,
right.
And how if we are not careful, it could wreak havoc on
right.
our. Okay, why don't we get started here?
Great.
Can we do that?
Yeah, let's do that. I think we
count.
Good evening, folks in India, and morning to the folks, in the US. My name is Krishnan. I'm the president for the IITMAA chapter in Bangalore, and on behalf of IITMAA, we are thrilled to have Kittu Kolluri talking to us today. You've read his background, so I'm not going to spend time on introductions. But what I found amazing when I spoke to him is that he has nurtured 6 billion-dollar organizations. One has at least 6, maybe there are more. One as an entrepreneur and 5 others as a VC. So surely, he knows something about product market fit. So I think it'll be wonderful for us to hear from Kittu. Over to you, Kittu.
All right, thank you, folks, and thank you for taking time away from. It must be, what is it, about 8 o'clock your time, and I understand I'm competing with Chennai Super Kings. Hopefully, either you're recording this or you're recording that, so you can watch both. So what I thought I'd do today is talk to you a little bit about finding the elusive product market fit. Krishnan talked in his preamble about companies that I've been fortunate to be associated with that have achieved sort of unicorn status. I'll tell you a little bit about them, the companies that I've been involved with. It started off first with my first company, which was Healthy on WebMD, which is a company I co-founded back in the mid-90s. We took that company public, and it subsequently became 2 companies, MDON and WebMD, and but both of those were public companies and billion-dollar companies. Subsequently, I invested in Aruba Networks, which ended up being a huge company before getting acquired by HPE. Bloom Energy is a clean tech company which was building solid oxide fuel cells that I invested in back in 2001 that then became a unicorn very recently. In fact, last year it went public. Then Climate Corporation was a weather derivative company that I'd invested in back in 2006, which got acquired by Monsanto for over $1 billion. Box, the cloud storage company, and then most recently Robinhood, which is a zero commission stock trading app. So that's those are the 6 that I've been fortunate. There's one other that is pretty darn close knocking. It's a company called ClearMotion, which is in the automobile technology space. They build active suspension for automobiles. But the reason I want to mention is not to really brag about that, but it is about what are some of the lessons that I've learned along the way. And what I found is for startups, it is not a little bit about finding product market fit. It is everything about finding product market fit. And unless you find that product market fit and you're able to then scale that growth, there is no unicorn status. You're not going to achieve that impressive market cap. So what exactly is product market fit? And that's what I wanted to kind of talk to you a little bit about. And what is product market fit? How do you go about it? How do you go about finding product market fit? And so I thought I'd spend a little bit of time talking to you about that. So here is how I define product market fit. Finding product market fit, and please sort of mark these words or hang on to every word because the choice of words is pretty deliberate. Finding product market fit is about discovering some non-obvious insight that makes it criminal for the customer not to purchase your product, thus creating inexorable demand for what you're offering. Now, that involves 2 things. One is proof of value, and the second thing is proof of market. So you need to prove out your value hypothesis, and then you need to prove out your growth hypothesis. So let me now peel that one sentence that I just made, which is discovering some non-obvious insight that makes it criminal for a customer not to purchase your product. So let's talk a little bit about discovery. Why I use the word discovery is because it is a process of conversations, first-person conversations that you need to have. And a lot of times, the truth is hidden in plain sight. And if it were that easy to find out, somebody would have already found out. And so the discovery process involves a series of conversations, first-person conversations, and really reading between the lines. That's what I mean by discovery. Okay, I want to tell you guys a little story. So I mentioned this company, Weatherbill, that I'd invested in back in the 2006-2007 timeframe. The founder of the company had come to me and said he wanted to build a weather derivative model using some 30 years of historical weather data. And I said, okay, great. What are we going to use that for? He said, golf resorts should care about it. Coffee shops should care about it. For crying out loud, even consumers should care about it, because consumers travel frequently. And so what if weather interferes with your vacation plans? Wouldn't you want to have some kind of weather protection? And I thought, okay, that sounds like an interesting idea. And I had, at that time, had seen at the point of sale some advertisements for travel insurance. So what if you fall sick and things like that? And so, okay, I said, let's roll with it. And I led the seed investment into that company with $1 million. And we were off and running. And interestingly, the first year itself, we were able to sign up Priceline as a customer. And Priceline did, I think, a $1.72 million prepaid royalty deal, and we were off and running. And on the backs of that deal, we went and raised a Series A as well. Well, what happened was, a year later, Priceline didn't renew. And we were like, what happened? Why didn't Priceline renew? Well, it turns out that they didn't sell very many policies. Consumers at the point of sale would be presented with this weather insurance, and they would pass. They wouldn't do anything about it. And so we were back to the drawing board. No business model, no business. The only redeeming aspect of it was we had cash. We had raised that money, remember? And so now we said, okay, what do we do? And somebody, then we had hired this product manager out of RMS, and the guy said, farmers buy weather insurance for their crops. And I thought, okay. So we went, interviewed farmers, and the farmers here told us, yes, the federal government actually does insure us for something called multi-peril crop insurance, but they use a 10-year moving average for yields. And so they only insure us for, call it 100 bushels per acre, but seed technology had improved so much that our yields had increased to 160, 170 bushels per acre. And so we were not covered for that incremental 60, 70 bushels per acre. Bingo. That was the non-obvious insight that we were looking for. And that process involved a discovery process of having the right kind of first-person conversations with our prospective customers, and then gleaning this out of them. And once you glean this out of them, that's when we went off, built what we called total weather insurance, TWI, which we layered on top of MPCI, and boom, that company went from strength to strength and finally got bought by Monsanto for over $1 billion. So why I like to tell that story is, we initially thought we had product market fit, but we didn't. We meandered our way through, but finally we found it. And that process took that discovery and the non-obvious insight. And why I use the word non-obvious is because if it were obvious, somebody else would have already discovered it. So I'm assuming some of you are parents. What is the one product that the parents of a newborn child cannot not have? Can anyone answer that question? Okay, I'll answer it for you. It's diapers. But that's an obvious insight. If it were non-obvious, then you were onto something. But when you come across something that's too obvious, then it's hard to build a business out of it, because you want to leverage that non-obvious insight to give yourself a first mover advantage and create a moat around your company. All right.
Kittu, this is Krishnan here.
Yeah.
Sorry, I just want to let you know that people are responding in the chat window.
Okay. Got it.
So please do look at
yes. Very good. Sorry, I didn't catch that.
The question window.
Thank you. Yes.
Thanks.
Okay. So excellent. Look, 3 out of the 4 answered right, or even vaccination is a very good answer. Okay, excellent. So so I talked about discovery and I talked about non-obvious. Now I'm going to talk about proof of value and proof of market. So the first part of discovering product market fit is about proving out your value proposition or your value hypothesis. And what that means is you're basically saying, okay, I'm discovering this non-obvious insight and I'm building something that is a painkiller for my customer. All right, it is an aspirin and it's not a vitamin. You've probably heard that, right? So the other way I like to describe it is, and I've heard this being used in other contexts, is, if you think about a customer as a marble, and the marble is stuck to the side of a fishbowl, where do you think the marble's natural state is? It is to be at the bottom of the fishbowl, right? But you need to discover a customer who is in such pain that they're stuck to the side, and with your product you're able to release them from that pain and provide them with a lot of comfort, right? So that's basically what that proof of value is all about, right? Now, I use the word non-obvious insight. The insights are, I want to double click a little bit on the insights. Insights are typically based on some established macro trend or emerging macro trend that puts wind in the sails of the startup. Okay, it is this shift that helps nimble startups compete successfully against large legacy incumbents who suffer from this classic incumbents dilemma that you've heard about, right? And so what I mean by the fact that these insights are sometimes trends, are external trends, and sometimes that you don't really control. It's your job to notice those trends or predict those trends sometimes, okay? And there are a lot of times, I'm sure you've encountered in your experience, you've encountered instances where something is the right thing, but just not at the right time. I mean, let's talk about ICL and IPL, right? Those of you who remember ICL, ICL was the same product that came out just a few years before IPL. Of course, didn't have the support of the BCCI, but didn't take off anywhere near as IPL did, right? I'll give you an interesting example from my own past. So my second startup was this company, Neotribe, and we were the pioneers of the SSL VPN. And what was interesting is that when we went to market with our product, there were some clear macro trends that we didn't have anything to do with that helped us a great deal. And those macro trends were, one was that enterprises were getting increasingly ubiquitous. Second macro trend was that the browser was also, enterprises were getting increasingly distributed. And the second macro trend was that browsers were getting increasingly ubiquitous. And so all we had to do was come in and sit on top of the browser and say, hey, you don't need a VPN client. You already have one. It's called the browser and it's already pre-installed on your computer. You don't need an additional client like an IPsec client. And so that is what helped us a big deal in building out our business. So noticing, discovering, and betting on these non-obvious insights is going to be important, or these trends is going to be important, because for a startup to succeed, you need one to be right. And you need to be right, the rest of the world to be wrong about that insight that you're essentially placing a bet on, right? And once you do that, that proof of value becomes easier, because then it comes down to convincing that customer to be on the right side of that shift, right? That then accelerates the emergence of your product market fit. So, but what I wanted to also say is this: it is not just about communicating this macro trend or this non-obvious insight. That is very important, by the way. It is very important to communicate that, but it is also about internalizing that inside of your company. Because once you internalize what it is that you're doing, what your place in the world is, what your positioning is, there is then clarity within the founding team and the management team on what to do, but more importantly, on what not to do. Okay, so just to summarize again, discovering the non-obvious insight that tells you why a customer, why it should be criminal for a customer not to have you. Discovery is about having those first-person conversations and gleaning the truth that is hidden in plain sight, right? And this requires a certain amount of domain expertise. The non-obvious insights are typically tied to some macro trends, or either established macro trends or emerging macro trends that you are betting on, and you are right and the rest of the world is wrong. All right. Then I talked about proof of value. Now let's talk a little bit about proof of market. Proof of market is proving out the growth hypothesis. And what that basically means is acquiring customers that are identical or similar to the ones that you proved your value with in a cost-effective way. And so that now gets into go-to-market strategies. What are your best customer acquisition channels? What are the most cost-effective channels? And so on and so forth, right? There is one definition I like to use. A startup has product market fit when the cost of acquiring the next customer and the time to acquire the next customer is asymptotically decreasing. Now, this happens when you have successfully achieved both proof of value and proof of market. But note that this is a trailing indicator. So why I like that definition is, if you are, and all of you are engineers by training and by passion, I assume, you can clearly put a picture to this, right? So if you think about it, the cost of acquiring the next customer and the time to acquire the next customer is asymptotically decreasing. And so it is very important to measure those metrics. What does your average sales cycle look like? What does your average deal size look like? What is your cost of customer acquisition? This is one of the things that I think the whole explosion of e-commerce and consumer-oriented applications has really changed how even enterprises behave is. There's much more of an acute focus on customer acquisition and customer acquisition cost. And I think that is very healthy. I hope that gives you a picture of how to detect when you have a product market fit. Is if you're able to measure customer acquisition cost, if you're able to measure average deal size, average sales cycle, things like that, now you know what your contribution margin is. How much am I monetizing each customer? What is my lifetime value of a customer? How much am I spending on acquiring that customer? How much am I spending on servicing that customer? What then is my contribution margin? And once you have that unit economics clear, then you say, okay, great. I just need to acquire so many customers to eclipse my fixed costs, and boom, I've got a profitable business. So that's basically what it's all about. And I'd like to share with you now very quickly sort of a framework of how do you go about in a well thought out sort of way discovering that product market fit. There is more detail in this framework than I can spend in an hour's time, but I'll share it with you. And for those of you that are interested, we can talk about things offline. But essentially what I've come up with is what I like to call a double diamond approach to going about discovering that product market fit. The first phase of the approach is what I like to call empathize. And this goes back to the first person conversations I talked about. It's really about empathizing with your customer. You don't go in and say, oh, I've got to find a fine, nice, shiny new toy. Do you want to buy it? No, it is really about understanding that customer, empathizing with the customer, putting yourself in their shoes, understanding what problems they're facing, and really discovering the pain that they are in and why they are stuck to the side of the fishbowl. Once you know that, then you can figure out what bomb to apply. You go in there saying, I have this, I want to solve it. You may be in for a root shot. So that's the first part of the process. The second part of the process is prioritize. So, during the empathize process, you'll get a lot of feedback from a variety of customers. And no, Manish, I'm not sharing anything on the screen just yet. I'm just talking through this. And so the second phase is the prioritize phase, because once you get all this feedback, what you want to do is collate that feedback and figure out, okay, what is the commonality between the feedback that you got, and then quickly say, literally, it's like, post-it notes. You and your founding team need to prioritize it. Once you prioritize it, you kind of know, right, what are the problems you want to go after. The third phase is what I like to call ideate, all right? And that's when you are going on and saying, and I highly encourage people to prototype, all right? Everything, make it an evolving prototype. Back when I was doing Neotribe, we had 6 alpha customers who were using our product before we raised a single dollar in venture capital. Okay, so the third phase, as I said, is ideate, prototype, iterate, and the final part is the develop and the deliver. All right, so those are the 4 phases of going through that discovery process. So I will stop there, and I've thrown a bunch of stuff at you. I hope you find this somewhat useful. I'll stop there and see if people have any questions. If you do, please fire away. How many people do we have so far? How am I doing
We have
competing
44.
against?
We have 44.
44. Okay.
44, and I request the people, you will not be able to speak. I request the people to type in the questions. Kittu will look at them and answer.
Okay, they're saying request to speak. Oh, all right.
Kittu, my request.
Yeah.
Please don't.
Yeah. Got it. Okay. I agree. Okay.
Type
Sounds
the
good.
questions, please.
Okay. Example to prioritize. Let me see. Well, what I mean by prioritize is, you can. Here's the other interesting thing that I've found in my experience, which is you set out to build a company with a certain idea and a certain market, all right? And you have a hypothesis around where you think you might find product market fit. And you find that it's actually somewhere else, right? That's your, I like to say that a startup doesn't start before you have experienced your first pivot. And so, Weatherbill Climate Corporation is a classic example of one. We were looking for the truth in one place, but accidentally found it elsewhere. So that is what I mean by, and when I say prioritize, it's really prioritizing one market over another. Umesh, why don't you get my contact information from Krishnan, and I'm happy to spend some time. Okay, Yashwant has a question. I get to the times when you hear about products being ahead of the market. How do we understand those offerings through the product market fit perspective? Do you wait for the market evolve, or so? The point about being ahead of the market is somewhat of a specious argument. It is really comes down to, remember I made the comment about macro trends and predicting or that emerging macro trend or establishment. So if you are on the wrong side of that macro trend, or if you are fighting a macro trend, forget about it. You don't have a product market fit. So, this is why when I find people, when I meet a lot of young entrepreneurs who are going out and trying to go against the grain and fight a macro trend, I tell them, don't do that, man, because you can't, as a young startup, afford to go against an avalanche. Okay. Would you suggest any tool like BMC for product market fit check? I've never used any tool, honestly. I think I've given you a framework. I would say it is very important to be metrics driven as you are going through this product market fit phase, because measure, right? And one other thing I say is don't give anything away for free, because you want to test whether the customer, how much of a pain point it is for the customer that they're willing to pay for it. But in general, I hope I've given you a framework. If you kind of executed this framework, but be very metrics driven, measure things, I think you'll do fine. All right. Does this mean that feedback from customers is typically new products and services rather than features and add-ons? No, I think even for features and add-ons, treat everything like, obviously it cannot be just one little feature, but something substantial, say, whenever you have a new product introduction, right, a new version, you want to kind of go through that process with them too. You obviously have, let's say you have a major new release coming in. You're typically going through a beta phase for that. And why are you going through the beta phase? It is to demonstrate that value hypothesis, right? How to decide if, the fit, if our production cost is mid-level, in mid-level scaling, it's still high, and the product has value in a particular segment. I see. You're saying, Sundaram, are you asking how do you do that in a cost-effective sort of way if your production cost is high? Is that your question? Okay, want you to expand. So, when production costs are high, one of the things that I feel is useful, this is where I talk about prototypes. A lot of times you don't need to build the full product. Sometimes, it is really useful to even prototype to create a story around your product. Because if your customer can buy into that story, it is all about storytelling, guys. It is all about telling them the story, sharing with them those non-obvious insights, those macro trends that they are experiencing. You want to get your customers to be nodding in agreement. If they're nodding in agreement saying, hey, this is what you're going through, and they're nodding in agreement, you have them eating out of your hand. Okay, next question. Okay, Pratik says, hi, you said you had paying customers for your alpha product as well. I didn't have paying customers. I had those 6 customers who said they would pay once my product was GA. I faced a lot of situations where after the product demo, I've often asked, can you design a small POC for our use case? I incur costs for developing POC as well. So what do I do in such a case? POCs are, even we used to have evaluations. Okay, they're a cost. I don't disagree. What you want to do is during that proof of value phase, you're going to have to eat that cost. That is, till you demonstrate that your customer, that you are solving a key pain point for your customer, you're going to have to eat that cost. That's why during that initial POC phase, you're not dealing with with bazillion customers, so that you don't blow all your capital. However, 2 suggestions I'd make. One is don't have an open-ended POC. Put a time bomb on it. So at Neoterrace, we always had like a 30-day time bomb. All right. If in 30 days you're not buying my product, you're probably not buying my product. All right. I knew exactly what my average sales cycle was. It was 69 days. So I didn't mind having my sales guys actually give out evaluation units. But I tell them, put a 30-day time bomb on it. And if the guy doesn't buy the product, he's probably not buying it. Pull the product out of there. Typically, 95 out of 100 people would buy the product right there. So have a closed-ended POC phase, and if they don't make a decision, here's the other thing. If for some reason a customer or a set of customers are not buying a product, go back to the drawing table. You don't have product market fit. All right. So that's important for you to have that intellectual honesty. One other thing I'll say to you guys, having been an entrepreneur myself, and I've worked now with a lot of entrepreneurs. Entrepreneurs are self-indulgent. That is, they like it when people say yes to them, right? But what I would encourage you to do is look for people who are saying no to you, and don't hate on them. Find out why it is that they're saying no. Therein, like, as you peel the layers on the objections and you overcome those objections, you'll find your way to discovering that non-obvious insight. Okay, I'm behind on my questions. Should one target early adopter customer for a new kind of product? How do I identify early adopters? Look, this notion of early adopter and mainstream was something that Jeffrey Moore in his book Crossing the Chasm had written about, and I think there is some amount of truth from when he wrote it back then, particularly in a more of a B2B sort of go-to-market. Nowadays, I think the lines are blurring. I would say if somebody is gets enamored with that prototype of yours and says, hey, this sounds interesting, and it could fix my problem, those could be good targets to go after. We're into underwater drones. Okay, we're receiving requests for service from various kind of customers. Always cost 15-20% for customization. Currently, we've done over 20. So customizations are dangerous, Kannappa, because there's a fine line between being product driven and project driven. The minute you start accepting customizations, you're getting into project driven kind of things, and I'd be very careful about that. Build a product company, so during that early phase, in that early adopter phase, it's important to do whatever your customer wants you to do, just hopefully with the hope that you'll find that proof of value. Once you think you have proof of value, then you switch into a next phase where the only way you're going to scale is if you standardize your product. And so I would urge you to resist the temptation to do too many project related stuff. Okay, Shashank, I have a couple of questions. Could you share views on choosing the word criminal in your definition? When I say criminal, I really mean that it does use a deliberate, and it's actually a word that my son used with me, and I thought it indicated the intensity of emotion. All right, that is, it cannot be a nice to have. That's what I mean, Shashank. All right. It's not associated with a particular product. It is really about where the customer is finding themselves. And what I like to do in finding product market fit is, you're not selling, the customer is buying. This is what I mean when you say you catch them nodding, is because you're finding them in that unnatural state, and you're freeing them from that unnatural state. All right, next. If I'm a fast follower, can I not copy all the features and release? So you may, but this is where I think during that phase where you have discovered that non-obvious insight, you need to make sure that you have developed a moat around your product. And typically, I like to see some kind of a technology moat around the product, because that makes it harder for your competition to replicate your success. Now, technology may not be the only moat you could build. There are all sorts of other things. There could be a process moat, there could be an intellectual property moat, there could be a distribution channel moat, and so on, brand is a moat. If you're a B2C company, of course, it's not cheap to build brand, but there are ways of building brands also. So that is the kind of moat that I think you should. Okay, let's move on. Chandra asks, how do you evaluate product market for deep tech products in developing economy? I think the framework that I've shared with you, I would use that same framework in developing economies or developed economies, and whether it's deep tech or low tech. In fact, I only invest in deep tech companies. If you look at our website, neotribe.vc, we invest only in companies developing breakthrough technologies that stretch the imagination, as we like to describe it. So it's companies that's pushing the envelopes, frontier tech. So it's no different. How product market fit fares in a typical B2B e-commerce. B2B e-commerce, not sure. What do you mean by that? I think, just to speculate on it, users, payers, and beneficiaries are different. I see. Good comment. So the buyer is different from, yes. So I think there it is very important. There was a different question. Okay. Sales happen in e-commerce platform. I see. Okay. So how I would go about it is very similar to what I just discussed. Just because the sale is happening, so that's your channel of sales, which is to do it online or e-commerce, where the customer is buying it through e-commerce channels. But in terms of finding that product market fit itself and proving out the value hypothesis, that's not significantly different. For healthcare related software, how do you target product market fit, users, payers, beneficiaries? Yeah, so good questions, Sendil. I think what is important there is to ensure that you have a value proposition for both the user and the buyer, right? And for the buyer, it's more of an economic value proposition. For the user, it could be more of a productivity value proposition or something along those lines, right? So, I think in the world, there are very few value propositions that work, right? Particularly in a B2B setting, it is, hey, I'm helping you increase your revenue. Hey, I'm helping you decrease costs. Third is, I'm improving productivity of your employees or whoever. Fourth is fear. I'm an insurance, right? Security is a classic sort of insurance policy. So those are in a B2B environment. Now, in the consumer-oriented space, there is probably a fifth one, which is delight. If you delight, like, the Apple iPhone, when it came out, it delighted consumers. And so that's something you can't put a finger on, but I would add a fifth there. Yeah, so Christian can provide you with my contact information. Just email me. My email address is kittu, KITTU, at neotribe, NEOTRIBE.VC. All right. What are the two interesting new ideas you've currently funded? Okay. I've more recently spent some time in the computational biology area. I think there is some very interesting things going on at the intersection of computer science, data, and human biology. So I like these interdisciplinary areas. So I've recently invested in a company that is designing a non-invasive prenatal test to detect single gene diseases like cystic fibrosis, beta thalassemia, which is very prevalent in India, alpha thalassemia, and doing that by using cell-free DNA, fetal cell-free DNA in the mother's blood. So that's something that I think is pretty exciting. I've invested in a company called Edison that is using solar concentration to split water into hydrogen and oxygen to generate hydrogen as an air product. So quite a few interesting. I mean, I really enjoy my investment in Weatherbill from way back when, because that was a very unique kind of a company. We kind of created the whole agri-tech, parametric insurance space. Since then, the whole insure-tech space has exploded. So I feel somewhat responsible for that. Okay, so any other questions here? Did I miss anything up on top? I don't think so. Opinion on the Indian startup ecosystem. I guess back when I was at NEA, we invested a lot in India, and I'm still affiliated with the NEA India team, which has since then split off to form Mega Delta Capital in Mumbai. I'm a venture partner with that firm, and here have been my learnings from my experience at NEA. I mean, I've been an investor in India and Indian startups all the way from 2003 onwards. The thing that I found is this. One is for a US-based investor, it is hard to take currency risk. We got hammered when the rupee depreciated against the dollar, because we are making our investments in dollar-denominated capital and through Mauritius entity. And when the rupee gets devalued, that hurts us. The second thing I found about Indian startups is I think the leadership of the companies is stellar. I think the individual contributors are stellar. What a lot of Indian companies are lacking, and young Indian companies are lacking, is middle management. And that is what hurts them from scaling. And I think there's an opportunity to train people on project management and people management, because a lot of people don't have that experience. Okay, what are some of the characteristics you look for in founders while investing apart from product? Excellent question, Shashank. You know, I look for this non-obvious insights that they've detected. Obviously, also look for their technological expertise. I look for teams that have worked together. But I'd say the one thing I like is I like to hear someone surprise me on some insight that they've had that I didn't know about. And that usually, when I go there, that's when I like, shit, that's very key. And that's what impresses me. What can India do in AI? Man, India can. So first of all, I think there is no AI without data. And so first of all, I'd say India is a country right now in the world, there's only 2 centers of innovation around AI. It's the US and it's China. And if we are not careful, there is going to be, and Yuval Harari makes this comment, he said, there's going to be the kind of arms race like we had with nuclear weapons. And India can control its destiny by making sure it controls its data. We should be very careful about letting others have our data. You know, I find that most Indian consumers are somewhat flippant about others using their data. Don't be so. What's the scenario of edtech startups in the US? Well, I think, you know, my good friend and brother-in-law Anant Agarwal, I think, spoke about edX recently on this platform. And you know, I think so. We were investors in Coursera back when I was at NEA, and I think the biggest issue that edtech sees is attrition. A lot of people dropping off. And not going through and finishing up, you know, their certification or whatever. I think that's been the issue. Now I hear that in India, edtech startups around exam prep are doing much better. And even here, by the way, there are some online apps and sites that prepare you for, say, GRE or something like that, that do really well. So it's, again, it comes down to, you know, finding product market fit. It comes down to, you know, why would it be criminal not to do this? So if you're preparing for GRE or JEE, you know, if you can find a customer for whom it would be criminal for them not to go through, your coaching, then you found product market fit. I had a streaming issue while you were giving your inputs to my query. Could you please summarize here? Here's my query. I often ask, can you design a small POC for a use case? I incur costs. Yeah, I think the summary, Pratik, is this. It is, one is you need to go through some of those POCs. I would make them time bound, and so that you get to an answer. And the answer could be that this customer is not the right customer for you. And so you may need to find a way to better qualify that customer before you go through the POC, since it's expensive. Second is maybe you haven't discovered product market fit yet. And if they're not making that buying decision in that requisite period of time, then you may need to go back to the drawing table. That was a comment I made. All right. Okay, what else do we have here? Hopefully that answers your question. We know Dilam Raja. I live in Zambia. I'm passionate about RFID and analytics and eager to start a company on either of the two. The country is still too early with data analytics. Any thoughts on what I could do? Interesting. You know, find, you know, maybe there's a way to do RFID on animals, wild animals. Because I assume poaching is as much of a problem in those countries. They lose a lot of foreign exchange. I think right now they're using a lot of GPS, which is more expensive. Maybe there's a way to use RFID. I don't know. I haven't thought about it as much. I'm just shooting from the hip. How many people do we have here, Krishnan, now? 45. Awesome. I'll take that.
We have 5 more minutes. I request the folks to just key in a couple of more questions, and thank you.
Any thoughts of analytics in Africa? You know, I'd say one other thing, Vinod, what I hear is that mobile phone penetration is increasing in Africa quite a bit. I actually think that Africa is the next major horizon for technology penetration. But I hear that mobile phone penetration is increasing rapidly, and there may be an opportunity there to build something. Analytics obviously requires data, and you need for data, you need people to be generating data, and large number of people to be generating data. Okay, I had a question here. What would you advise to a student entrepreneur who's looking for customer discovery process in health and wellness sector? I need to know a little more about that. When you say student entrepreneur, I'm assuming you're still at school. Health and well, I guess there it's about having, again, like I talked about, having a lot of first-person conversations with your target customer. Customers don't know about completely innovative products they've not thought of. Product market fit for truly disruptive doesn't make sense. Yeah, it does. I mean, like, when I was telling you about generating hydrogen from solar concentration, there's a product market fit that you need to find there too. There are advantages to that approach, there are disadvantages to that approach, and things like that. So yeah, you do need to find a way to.
Okay. There is a question in the questions box.
Yeah, I answered that. Yeah, that's the student entrepreneur question. Yeah. All right, let's see. Kanappa, when is the point to product pivot or just continuously to find the product market fit? So the thing about product pivot is this. It is when you're going through that discovery process, Kanappa, it is very important to actually be extremely intellectually honest and empathize with the customer to the point where you don't have any preconceived notion. Now, you may have a hypothesis that you're trying to prove out, but what I bet you is you will find a use for it. You may find a use for it that you haven't even thought of. Like, I'll give you an example. Okay, I remember back when we were at Silicon Graphics, which is the first company I worked for. It's a 3D graphics company. What we did was we made it easy for people to visualize data in 3D, or visualize various things in 3D, whether that be, and we thought, okay, CAD would be an automatic market for us. And it was, we did really well there. We thought, what is this? The movies, Bollywood, Hollywood would be a good market. That also turned out to be pretty good because people used our products for Jurassic Park. But there was something we found product market fit in that even the leadership of the company could not have predicted, which was in oil and natural gas. We found our customers using our product to model seismic activity. And from there, they were able to predict where to go drill. And believe it or not, we had no idea that that was a market for us. But that only happened because of some of these stray conversations we had. Okay, can you give us what stage of company you typically invest in? I like to do typically seed and A. I don't do pre-seed because I don't do party rounds. If I develop conviction, I make a meaningful investment. Because my whole value proposition is helping those companies find product market fit. How do you go about identifying product market fit for B2B opportunities? Is there any way other than first person interaction? There's no substitute for first person conversations. Look, doesn't matter whether it's B2B or B2C. Somebody is a buyer there. There's a person who is a buyer or a user. It's really paramount upon you to go have that conversation. Make sense? There's no shortcuts to success.
See that we have crossed the 1 hour mark now.
I can spend a couple of more minutes if anyone has any last questions, since we started a little late.
Right.
Okay, I'll let everyone get back to, looks like there's one specific doubt. Some B2B interactions for larger companies led to danger of losing our idea. In what way is it that your the moat was not strong enough? Okay. Well, that is, if your moat is not strong enough, then you need to figure out how to make that moat strong, and how you are uniquely qualified to solve that problem. Make sense?
Great.
Okay, folks, really enjoyed this. Great questions, and I hope you found this useful. Thank you very much, Yashwant, and thank you all for your comments. You're all part of the greater IIT fraternity. and sorority. So I'm here to help in whatever way I can. And so feel free to drop me questions. If I'm a little overwhelmed, please bear with me if it takes me a little bit to get back to you. Okay.
Right.
But hopefully you found this useful. And I look forward to meeting some of you on my next trip to Bangalore or Chennai.
Kittu, this is Krishnan here. On behalf of IITMAA and all the alumni here, I want to thank you for a very insightful session. Discovery, non-obvious, and criminal. These were things that I have taken away. I'm glad that I chose this session over Dhoni. Thank you so much.
One last comment I'll make is this, guys. When you go to search for the product market fit, the opposite of yes typically is not no. The opposite of yes is indifference, apathy, status quo. So remember, you're fighting a status quo. You're changing behavior. And so the only way you'll get a person to change behavior or an organization to change behavior is if you help them find themselves in deep pain. And that's what I mean by criminal. Okay, on that note, thank you very much for hosting me, Krishnan. Enjoyed it, and we'll chat soon.
Bye-bye.
Bye.